All right, what is up, YouTube traders and traders from around the world? It's Robert Falco back with your Friday stock review. Hope you all had a fantastic holiday week last week for Thanksgiving, and what a start to the month of December. Day trading wise, it's been absolutely phenomenal, especially if you know how to day trade short. You've just been able to absolutely crush these moves because there are some things in the markets that are getting absolutely eviscerated out there. We'll cover a couple of them today, but here's the SPY. I really thought that this last Friday, Black Friday, was a little bit of a trap on Monday when we gapped up and closed above it. But then here comes Jerome Powell on November 30th. As soon as he said that we need to retire transitory around inflation, the market immediately started selling off. Then he talked about doubling the speed of the taper, you know, even with the Omicron, Megatron, whatever is going on. I don't think that is really the reason for the sell-off for the market. It might be a little bit, but I think overall it's Powell, because the very next day he was back in front of Congress. You know, prior day was the Senate. We were trading up. As soon as he started talking again about doubling the speed of the taper, market started selling and just got absolutely wrecked. Had an inside bullish day. We gapped up and rolled over again today. We almost came into the 100. We got very close to that level, but we did not close below. So there's a little bit of hope out there. As soon as Powell said the whole transitory, you know, we need to retire that word, I felt like, hey, that's a pretty big shift. And I immediately bought puts. I bought 447 puts on SPY to protect some long-term portfolio. Today I did sell 425 for December expiration. So a little bit of a calendar spread there. Not against all my puts that I bought, but against one of them. So I think we could end up going a little bit lower on the SPY overall. I do still think the dip is viable. And, you know, again, just keep in mind, like, how high we are. And we're only, you know, down about 5% or so. Here's the QQQ. And the Qs, it does look, it looks like a head and shoulders. We did close below yesterday's candle. So even though there was a little bit of a wick, we closed below that. And we pretty much closed right on top of this old prior high out here. So I do think that the market is going to go lower. Again, I think it's viable in most things, but some of the things that we'll talk about, I definitely do not think is dip viable. Here's IWM. Looks like this was a false breakout, retested pretty deep. We are still holding some of these support zones, but if we start taking this stuff out, I would probably buy puts on the IWM. Here's Square. So Square is profitable, however, barely. And it's still a relatively premiumly priced stock if you're looking at valuations. Valuations are starting to matter again. I think a lot of this unprofitable tech stuff that was 20, 30, 40, 50. I mean, some of these things were 100 times price to sales. That started to matter. I think that bubble popped. I think this was a bubble year for a lot of things. SPACs at the beginning of the year. Some of these other things. I don't think Square in particular is a bubble, but it's definitely under pressure. It is down about, it was down 40%, about 37%. So we didn't hit the long-term weekly 100 there on SQ. I think there could be a little bit of a bounce, but if you're in shares of Square with yesterday's close below all this support, that would have been a buy put alert for me, for sure. So Square could come lower. It could bounce on here. I would tiptoe into this one if you're not already in. If you're starting to buy the dip, cool. I mean, man, I think this could come back into 150, but between like 135 and 150, I think it could continue to go a little bit lower. DocuSign, absolutely eviscerated. This is not a buyable dip. This chart is completely broken. Even though they did okay on earnings, you know, their growth is slowing and the market hates that, and they lose a ton of money, and they lowered their guidance. This thing got murdered all day long. There was literally no one buying it except maybe Cathy Wood. I haven't got the email yet, but she probably bought a ton of this out there today. I wouldn't touch this stock Everyone in the last year and a half is trapped. This could come much lower. I mean, heck, this thing could return, all the way into like $90 or so. I would not touch DocuSign or any of these, fallen angels. Apple was trying to hold up the entire market the other day. Everybody's hiding in Apple. If you don't want to be in cash because of inflation and you want to be in some type of asset, what are you probably hiding in? You're probably hiding in the most profitable company in the entire world that is still holding trends. So you're probably in Apple. Eventually, if the selling continues, everything's going to get hit, including, the best companies. I do think Apple, could have a pullback. I mean, even if we pulled back 20%, though, that would bring Apple, maybe into like the mid 130s. That would actually be really nice because that'd be right into this support, all of this. I think there's a ton of people hiding in Apple. If people need to start getting liquidity, they're going to start selling some of these liquid names versus, things that are illiquid, like DocuSign. Speaking of illiquidity, Cathy Wood, ARK funds getting destroyed. I mean, this looks like if you just Google like parabolic market cycle, this looks like we're about to fall through that anxiety level, and we're going to get into capitulation. And I worry for ARK from a standpoint of a lot of this, everything but two stocks in ARK are in a bearish market, meaning they're down over 20%, 25% plus. The only ones that's not is Tesla. Tesla's almost there. Got very, very close today. And then like one other thing, Trumbull or Tribble or something like that. She just keeps buying all of this stuff that is just getting absolutely destroyed. She's buying Hood. She's buying more Teladoc, Path, Skills. If she starts getting redemptions, I'm not calling for this, although I will say I am short ARK. I have a leap put on ARKK. If she starts getting redemptions and she has to sell stock in order to fund those redemptions, who's she going to sell some of these stocks to that don't have liquidity, that are just getting absolutely destroyed? She's going to drive the prices even lower on herself, which is going to cause ARKK to go lower, which is going to cause more redemptions, and this thing could just snowball out of control. I'm not saying that this is going to happen, but you could be looking at if things get nasty. Just want to give you all the worst case scenario, especially if Tesla starts pulling back, because that's like her only winner at this point. You could see ARK completely unravel. So I don't know what's going to happen with this thing. I'm short it. I did sell a put at December 80 against my long put, and I have January 2023 puts on ARKK because this thing I think is going to fall through the floor, especially if the selling continues and it bleeds over into a Tesla. This thing's going to go down. It's going to go down hard. So be very, very careful. Just my opinion. I'm just a dude on the internet, not a financial advisor. Lululemon. So we got a request on this one. This one looks pretty good. It is having a little bit of a pullback. Earnings are coming up. We'll see what happens. I wouldn't buy it before earnings because everything just seems like it's getting murdered on earnings. I would look to see if I could get this between like 386 and 400. That would look like a better area to me. But Lulu is in a nice trend and it's still holding up pretty well. So and it's the holiday season, so Lulu will probably have a pretty nice quarter. So Lulu is definitely one that I think is dip buyable. I might consider buying the dip on a little bit of Lulu, but all of the, high growth, unprofitable, sky high valuation stuff, I just wouldn't touch. I would short all of them. I shorted Net. I held some shares short of Net. I lowered the stop, so I can't lose on those shares. I'll get out of them at 140, unless it like gaps up to 190 or something crazy like that. But I shorted the heck out of it over there. Chinese stocks, by the way, I wouldn't touch these. We shorted Neo today. I think everyone who's been watching this has been hearing me say, do not buy any of these Chinese names. They're probably going to all get delisted, and it looks like that's the way that it's going. So if you hate money, I would say go ahead and buy some of these Chinese stocks. DD already said they're going to delist. This will be a penny stock probably on Monday, which means it'll be below $5 probably, and an absolutely horrible IPO. Uber took a $2 billion write down on DD, so yeah, that's an absolute disaster area. So stay away from the Chinese names, my opinion. You want some companies. Now that Jay Powell is shifting his narrative, unless he does a complete 180 and says like, hey, we're actually going to slow down the taper, or we're going to keep it at the same pace, but him speeding up the taper, out of nowhere, I think that changes some things with the overall market. Don't fight the Fed. Fed's the most important participant in the market, and looks like they're going to be tightening up on some of that liquidity out there. So that's all I got for you. If you do want to come check out Real Life Trading, by the way, our website is here. And next week, I'm going to be teaching the advanced course for a whopping $35. So I think that's a heck of a deal. Would love to see you there. Go ahead and click on that if you want to come hang out with me next week. And don't forget to love life, live life, trade it. Thanks so much, everybody. Have a great weekend.